But Josh, this is the question I wanted, kind of ping you on here. You, I think, I can't read minds, and I can't, put my, telepathic, hat on and think what you were thinking. But I think you're right to question and say, just exactly where are these phenomenal gains coming in the crypto universe? This doesn't really make sense. Or if it does make sense, maybe I'm just missing something because it seems to make really good sense. And if it makes such good sense, why isn't everyone on this quicker than a fat kid on a cupcake? So the question I wanted to ask you, Josh, is this. We've oftentimes talked a lot about the meme stock, XRP or whatnot. And I think if you were to boil down my thinking through all of that, it comes to this. The signals that the market is using to try to make sense of the reality are fundamentally flawed. And because of that, any analysis that you do with the signals, take price, for example, will be fundamentally flawed. It's not that you don't know how to do math. It's just that the numbers that are being put up for you to solve are incorrect. You're doing the correct processes with the information you've been given, but everyone assumes the information they've been given is solid and trustworthy enough to actually rely on. Josh, you're very suspicious of if the crowd's doing something, run, do not walk away from it. And what I wanted to ask you is this. If you have the suspicion for the cryptos, which I think is justified, do you have the same suspicion for the market at large, equities, bonds, whatever, the traditional boomer investments?
Well, there's no doubt, and I will say this, and the market is at historically bubble territories. It is the most overvalued the stock market has ever been recorded. All right. Same thing with bonds at 5,000-year highs. And it is just overwhelmingly clear that we are in a super bubble. I mean, if you just look at a chart adjusted for inflation, we are on the same level since the 1999 stock market bubble, except we're higher. Same thing with the 2008 housing bubble. We're higher than that in the house market too. Bonds, the highest they've ever been. So to say that we are not in a bubble, I think you are just lying to yourself, or you have to make the argument that we were not in a bubble in 2009 or in 1999. And that being said, does not mean the stock market is going to crash. All right. We could, and for example, in 1989, Japan stock market, we would have to pretty much double in valuations in the NASDAQ to get to where Japan was in 1989. Also being said, Japan has not yet recovered in nominal terms from that stock market crash. It's been 40 years, right? Let's say I'm almost 20 years old. I'm 18. Let's say we have a Japan 1989 stock market crash. I'm going to be 60 by the time in nominal terms that my portfolio just breaks even. That is absolutely fucking ridiculous. And everyone just says, oh, the stock market just goes straight up. And Craig Manarino says this a lot. Oh, it goes up with a slight drift. And yes, but you could still see the stock market does not go straight up. And we could see a 40-year crash. But I don't know if we're ready for that yet. And I say that for a few reasons. Because one, if you have not been long tech this past few months, you've lost money. Nothing is going up. And I'm someone who's I'm a deep value boomer when I'm in my portfolio right now, right? Just strictly value stocks that have, I think, a lot of asymmetry. I've gotten crushed, absolutely crushed. And I'm okay with that because I'm playing to my strategy. But that's what everyone else is doing too. Like, if you just see the sentiment in the market, it is not bullish as it was, say, last January when meme stocks were going up. During that time, I was feeling really, really uneasy because everyone was, let's go stocks, let's go. And we got over that. And since then, the stock market's continued to go up, but almost everything's been down, besides tech. So the retail investor is doing well right now, but no hedge fund is performing. And what could happen is everything comes down, and this is the end, which it would make sense to me. And I have a long volatility position where I think I would be okay if that happens. Or, it just keeps going up. And I just think this will end in Jim Rogers once said that when you see a mania, you can tell it's going to be over because the stock market starts to gap upwards, and you saw this with lumber a few weeks ago when it was starting to peak in price. It would shoot up 100 points each day, and I went short lumber, and Jim Rogers was fucking spot on there. He also said the same thing in 1999. There was 39 days. I don't quote me on this because I don't know exactly, but if from memory, I think there was 39 days that made up for about 30% of the move in the market going up. So it gets really bubbly towards the top. We're not there right now. I just don't think so. I could be wrong.
So let me ask a few follow-ups for that. Manarino mentions that it's time to run for the hills when you see the market going down and the 10-year yield spiking up. So in other words, people are selling off 10 years and they're presumably selling off the market. What's your thoughts on that?
Yeah, I think that is I think if we see, let's say, the 10-year go to let's say we have inflation running at 10%, the Fed loses control of the bond market, it shoots up to say 5-6%. The stock market's not recovering. I just don't see that happen.
Okay. So let me flip that around and say the position I come from is that prices are ridiculous, one way or the other.
No
I
one,
don't mean
and anyone that denies that, I think, is being intellectually dishonest or naive.
right, but my take on it isn't necessarily from a valuation. That's not to dismiss the valuation. I think that there's something there, but rather it's from this. Whether it's undervalued or whether it's overvalued, hint, probably overvalued, but whichever way it goes, I just think the numbers are flat out wrong due to manipulation behind the scenes by powerful players. In other words, fundamentals might tug it might tug the market one way or the other, but at the end of the day, if you know the tricks of the trade to generate sentiment, manipulate sentiment, or whatnot, who cares what a company does? Again, channeling Manarino here, the market had more bad economic news, and up it goes, or whatnot. Who was the person that quipped? Oh, and I can't remember the source of it. But they mentioned that back in the day when they did investing, you would buy equities for growth appreciation, and then you would buy bonds for the yield. And now it's flip flopped.
Yeah.
People are buying equities for the dividend, so there's your yield function, and they're buying bonds to capture the appreciation when the rates go down. So
Yeah.
it's almost like this really weird inversion.
And something it would be trust me, I would be a diehard 60-40. You know this. just from my boomerness. Let's say we go 10 years down the future. We see a 1970s type of inflation. Yields are at 15-16%. I'm gonna leverage up 60% of my portfolio in bonds because that would be kind of inversely correlated to stocks, and then I would have 40% in stocks. I would love that. And then you sit there looking pretty for the next few years. And that is almost a long volatility hedge because at that point, it would be inversely correlated again. But right now, you can't have a 60-40 portfolio. I mean, you could, but I just think it is incredibly stupid. You earn nothing on the yield. Actually, you're guaranteed to lose money on the yield. And as we can see last March, it wasn't acting as it wasn't inversely correlated to stocks. At one point, it broke that, and it's no longer inversely correlated. So I don't really think there's
correlated. I mean, isn't that what's going on? Stocks are going up and bonds are going up. Like it's doing the exact opposite. It's correlated, but it's correlated in the other direction. Like this doesn't make any sense.
Yeah. So 60-40 is dead, and because who wants to hold? I mean, as Craig says, you're guaranteed to lose money if you hold a 10-year treasury. It's just there's absolutely no reason to buy one. Unless you have 250 in the bank, then you just roll T-bills because banks don't secure over 250.
Yeah, but see, here's where it gets really weird though too. So I agree with all of that, but again, I think I sent you the reverse repo number earlier today. What was it, Josh? It was like
1.05 or something like that.
Yeah, I was like
1,500,000,000,000 maybe, or 500 million.
50 billion, 1 trillion, 50 billion, give or take, give or take, on that front. So when I look at that, not to go down the reverse repo rabbit hole, but my gut feeling, probably wrong, is I sense that you have buyers in the market who must have this collateral, who are buying up the market T-bills that the normal guys, the mutual fund, or hedge, or excuse me, not mutual funds, but money market funds would otherwise be buying. But the money market funds can access the reverse repo window. So as the money market funds are displaced by this mysterious buyer in the open market, they turn to the reverse repo window. And from the Fed's perspective, you have this increase in demand that's being able to be absorbed without letting rates on T-bills go negative. Supposedly a big no-no. I don't know why it's a no-no. I just know that I've always heard
Justin,
that.
don't you know there's just too much cash in the system?
Well, of course, that's why Bank of America just, was trying to get the okay to do $123 billion bond issuance,
Yeah,
because there's too much cash in the system.
there's just so much cash. That's
Too much
such
cash.
a shame. So someone that you were going into, and I think you should explain a little further. You're
Yeah.
saying that you're not sure if the signals in the stock market are actually signals because you don't know if we're looking like. Can you go into that a little more? And if you know where I'm getting at.
Yeah, I think so. Although you're not going to bait me on this, Josh, because I know if you're playing like the buzzword bingo game, if you think what you can get Justin to do on a rant on about. Imagine you're flying a plane and it's dark. You're going through the clouds. But no worries, you're a pilot. You've been trained. You've got your instruments. You've got your radar and all the other equipment in order to fly the plane. And assuming your equipment is giving you the correct information, you're trained to land the plane. No problems. You've got it covered. But the assumption is that the equipment is giving you accurate information. Because as a pilot, you could be making the correct decision with the information that's being presented to you, but you must trust the information that's presented to you. Because if the information being presented to you is inaccurate, you're going to fly into the side of a mountain, or bad things will happen. And excuse me, when I look at the market right now, and it's not just the market, there's other ways where this comes up too. I just scratch my head and I just wonder, how distorted is price? And I don't have a smoking gun that I can point to either. It's just one of these things that, and perhaps it's nothing, but I feel like nobody's given serious weight to the question. And because no one's given serious weight to the question, it's this blind spot that everybody has. Why do black swans always creep up on us? Because we should have been able to foresee it. And in hindsight, we say, well, of course it makes sense. But going through it, it doesn't. Maybe another way to view it is like this. If everyone's jumping off, did your parents ever tell you when you were little, if everyone jumped off a cliff, would you jump off a cliff too? Did you ever get that speech, or was that just, you did?
Mhm.
Okay. I'm sure you did as well. I was watching this. And I think it's a very accurate thing to say. And it's so easy to say, well, of course I wouldn't jump off a cliff. But imagine how strange you would look. In other words, you're standing off to the side as everyone else, as all society is stampeding off this cliff, to their eventual doom. And as they run by you, they say, you idiot. Why aren't you jumping off a cliff? Clearly everyone's doing it. Look at the consensus. We all can't be wrong. And I feel like it's kind of the same thing going on right here, where we have these built-in there's two things in life that get you in trouble. What it is that you don't know, so the unknown unknowns, and what it is that you do know that just ain't so. Because that's like the pilot flying in the cockpit, relying on data which he believes to be accurate, but is not. And that's how I view price signals in the market. I mean, that's why I'll give you the win, Josh. That's why I'm so bullish on GME, is that I sense, and this is just my gut talking, or this is backup. I'll get even worse. This is just me pulling it out of my ass.
Mhm.
I suspect that there's something more there. And when I look at the market for my own self, I just view it as a joke. In general, if the price signals are distorted, if price is being used as a tool of misdirection, what's the point of even playing in the first place? The only way you can get any alpha on this is trying to figure out, okay, well, listen, this thing does blow up. Let me buy whatever blows up. And that's not market sophistication or a great investor. That's just simply saying, that's just looking at the shenanigans and saying, well, when the shenanigans finally reconcile, this is how it's going to reconcile. I had a great accounting professor back when I was in my
And
master's.
honestly, I think that's a strategy in its own. He said you wait for
Yeah.
everything to blow up and then you buy it. I'd say
Well,
the retail investor does the opposite.
yeah, and like the so again, when I look at the market, it's really just GME is all that I've got in my very, very small market position. Although I might be looking to expand it in the near future, we'll see.
Like if we see a crash or a correction, and I mean, there's companies right now that are producing 2-3 times price to earnings, like pumping cash, so shipping. China is preventing ships from like coming in or something, or there's a congestion because of COVID, so they're shutting it down, and that just means less goods and services are leaving and coming in out of the country. And as we know, China, we get a lot of our shit from China. So if we're not getting shit from them, the prices are going to go up elsewhere. And either way, there's just, I mean, these like I get it is there's so little supply and demand stays stagnant, along with the government's forcefully stopping supply because of COVID fears. We gotta be scared, so we can't let these goods and services leave our country, our goods. So no goods are going to be coming, along with the prices skyrocketing that do.
Yeah. Yeah, so just as I was ruling against consensus a little while ago, let me do an appeal to consensus. So shame on me for being such a hypocrite, but whatever. I think Gammon mentioned this in a conversation he had with Snyder, and it was words to the effect thereof. When you talk to all the people who are deep in the market, who have a clear idea, at least knowing what it is they don't know, they might come to different conclusions, whether it's Zhang, whether it's Snyder, Macro, or whatever, right? But at the end of the day,
I would not consider Zhang deep in the markets.
she has her own viewpoint. But here's the thing that's interesting when you look at all of them, or back up, and throw in like Johnson and everyone else, or Lynn Alden would be another good example. They all own physical gold.
Mm-hmm.
Now, granted
because that on your monetary pyramid that you love, there's no counterparty risk. You own that gold, and it is the safest form of money that we currently have. And to disagree with that is, I think you are just lying to yourself or being disingenuinely dishonest. I mean, disingenuine.
There you go. Yeah, and so I don't know what the answer is, but I do note that whether you are in the inflation camp or the deflation camp, whether you are bullish or whether you are bearish, everyone who seems to take this stuff seriously, they all seem to own a little bit of gold. And I find that very interesting. And I will also add, just again, forgive me for doing an appeal to consensus here. Central banks starting in late 2008, Josh, or whatever, back up. Let's just say for the past decade, central banks have been buying gold at a breakneck pace. So I find that very interesting too. Well, anyways, it's just so be it. Although you can pull up a price of gold, you can note that it's done rather poorly since the beginning of the year. I would kind of view it as a time to buy because it's going on sale. And the one thing I tell the silver guys, such as what I consider myself to be a pretty big silver guy, as well as the gold guys, and I think I told this to Zhang even in Miami, we should be naming our children after Jamie Dimon. Like, I legitimately mean this. As much as JP Morgan smashes the price down, excuse me, as much as a hypothetical bank might smash the price down in a hypothetical universe, who cares? And one of the things I find hilarious about the silver community, same thing about the Bitcoin community, is when they denominate Bitcoin in terms of dollars or silver or gold in terms of dollars. Like, guys, what are you talking about? The entire reason you're buying this asset, whether it's digital or physical, is to get out of the dollar. So why on earth are you using the dollar as your yardstick to measure your progress in disengaging from the dollar?
You kind of need something, because what is the utility of gold if you're not, because you're not going to a grocery store and saying, all right, here's a gold coin, give me my groceries.
$50, please. Yeah.
It's just like for now, we need like the dollar is the barter tool that is used. So it matters what the price of gold is relative to dollars. And I do believe gold will continue to preserve its purchasing power unless it's banned in the future, which the road that we're going down, I would not be too surprised if it does. I think Bitcoin would be first in that, but I do think that if, let's say, this road to serfdom is coming, I would not be surprised if a gold confiscation is yet again enacted.
Josh, I don't disagree with the motives, but I would quibble with the means. And actually, I'll channel Zhang here for a second. It is far easier to, what's the word that starts with a C? Versus, it's far
Honesty.
easier. No, 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 no. Rather than use coercion, there we go. It's consensus. All right, you want to get people to agree to make it happy, versus to rule with an iron fist. Now
Hmm.
the results might be the same, but I think that if they were going to go after the metals, for example, and Rickards, I think, is the one that talks about this. All the Federal Reserve has to do is just set up a window, or should be a window, an open market desk, saying like, "Listen, we'll buy your gold for $50,000 an ounce. If you think that's a bargain, sell us your gold. If you think it's a bargain to buy, bring us $50,000. We'll give you as much gold as you want at 50K an ounce." And you have people thinking to themselves, "Oh my goodness, 50K an ounce for gold. I've made it and gone to heaven or whatnot." But this gets back into your point. It's something that Gammon references often too, is that it's the purchasing power. That's the real thing. And this gets back to this question of the standard, because whatever standard we use to do the base reconciliation for, like, there's always going to be issues with that. I think this is Triffin's dilemma right here, and that's coincidentally why I think XRP is the answer to that. But let's off to the side for that. But anyways, my point is this: is that if they are going to shut stuff down, they will do it through pleasure, love, and joy, which is, I think, far more pernicious and seductive than coercion, threats, or whatever. In other words, for Bitcoin or whatever, right? They might simply say, like, "Listen, we're going to ban Bitcoin, but listen, we understand Americans have bought into Bitcoin. We don't want the government, Fed, Treasury saying something like this, but we don't want government, we don't want American citizens to be out the money. So if they turn in their Bitcoin to the Federal Reserve, whatnot, we will pay you out, some exorbitant amount, so you won't be out of pocket." And so if you do something like that, you essentially have this bribe of the community. Now that would actually be really interesting to see what would happen in that regard. So particularly if the price is less than, or particularly the price of Bitcoin is less than whatever this entity would be offering to buy Bitcoin out in dollars, because you have an arbitrage play.
Hmm.
For example, if they're buying it at 100,000, you go into the open market, buy it for what, 47,000, turn around and sell it. You see, like, like you're
Yeah.
going to stabilize. I mean, you're going to put a floor on that pretty damn quickly. Or I would assume. But at the same time, too, all you need is one other country, to break the trend and let it be legal. So, anyways, I'm sorry, Josh. Long-winded way of saying I think that you're right, but I do disagree with the MO. They would want to persuade,
Yeah.
entice, bribe, whatever verb you want to use, versus bludgeon, or at least I suspect at this stage of the game. So, good point, though. Good point.
All right. Our
How long have we been blathering on for?
Yeah, I think we can end that one.
Okay, gotcha. Guys, until next time, been good.